Okay, let's go to the first cluster. In this first cluster, we will be discussing the topic of stakeholder expectations. What do stakeholders expect from auditors? And we will be highlighting perspective of investors, preparers, regulators, and society at large. This might be very different, at times contradictory, but so how do we make this work for the auditor? We're going to ask this at our first speaker, and he is Eric Anstey. He is Executive Chairman of the CPP Group and Independent Non-Executive Director at PayPoint. Mr. Anstey will speak from the perspective of an investor and will, among other things, speak about the concept of value for money audits. Give him a big applause. Eric Anstey.
Thank you. Well, good afternoon, ladies and gentlemen, and as I'm the first person to speak, I've got to try and work the technology. As the moderator said, I will be covering investor needs, and I thought it was first of all worth me just saying that any points that I say here probably will be controversial and therefore shouldn't be attached to any organisation I'm associated with. First of all, I'd like to just, as I'm starting this discussion, thought it was just worth reflecting on the role of auditors and the audit committee, because I think the box of auditors and audit committee sit in between investors and stakeholders and the management running the business. And the auditors clearly have a dialogue and a relationship with all those parties, as well as the audit committee itself. And I think it's a very important piece to just reflect and consider the relationships between auditors, the audit committee in that box, the investors and other stakeholders, and management on the other side. So talking about the investor needs. First of all, an investor is looking for risks. It's looking for the assessment of risk. It's looking for the position on key risks. It's looking for mitigation strategies. I think what we've seen, certainly in my experience in the UK, is too much boilerplate on risks without really explaining what the risk positions are and which ones are the more important to companies reporting. I think materiality, therefore, what really matters, what are the real issues in producing accounts do the auditors really think should be raised. And areas of subjectivity are the areas that where there is judgment involved. What is involved in that judgment? How is it being done? And to what extent is that really, again, material to the reader's views on the numbers? And then we come to the issue of compliance and controls. Has the corporate complied with all necessary regulations? And I think this is an area that's getting more and more difficult. Are all the Consumer Credit Act, for instance, in the UK is being quite a complex set of changes. So if you provide credit in any form, have you complied with that? And it's something that boards and auditors are not always looking at. Have all the controls been properly assessed inside the business? And again, linking back to risk, if controls haven't been assessed as adequate, then why not, and what effect do they have on the accounts? And value for money issues. Sometimes looking forward, and the nature of this conference, looking forward long term, I think it's worth looking back. Now, value for money issues used to be a very big buzzword when some years ago I was an auditor. And how can the company innovate? How can the company improve? Was something an auditor could bring to the table on an annual basis, overlooking the company with a separate set of eyes to the management team. As an investor, I'm interested in those views. I'm interested in any thoughts that the auditor can bring. They've got a wide range of experience across other industries, other other clients that they have. So I'm interested in hearing that. And I think this issue of value for money is being lost. So I'll start my first buzz question here, if I can. And the question is, do you agree that value for money auditing should be part of the audit process? I think this issue has tended to get subsumed with the debate around auditors providing other services. And the danger is that the answer therefore comes out sometimes as a no. But here we are getting a yes answer. So I'm pleased to see that. And of course, finally, my final point on this slide is that the investor is, going back to slides, the investors are looking to make sure that this term that the regulators are very keen on at the moment is making sure that they maintain a healthy scepticism. And hopefully that's reflected in all the areas that I've mentioned in the points above. So I'd just like to also comment on the reporting, therefore, of audit committees, which reflects, again, in my next slide after this, we'll talk about the audit reports. And I'm conscious that audit committee reports, how far should they go? One of the issues that I see as quite critical is an examination of the company's business model going forwards. The digital age threats to virtually any business's business model is quite an interesting issue. How does the digital age not only affect auditing, but how does it actually affect the companies that are being audited? And it seems to me that this is not something that I'm currently seeing in audit committee reports. Equally, the issue about what are the legal implications if these reports start to go too wide. For instance, just reporting on litigation can itself be a problem in as much that it is giving away potentially the company's position on a litigation aspect. And commercially sensitive issues of competitive advantage can also be an issue for these type of reports. Certainly the ones that I can speak of in terms of the UK, the new versions are very mixed. We've had 2 years' experience now. Some audit committee chairmen are really grasping this and putting in worthwhile reports, and others aren't. So I see that there's a lot of improvement needed in those reports, which in turn reflect back on audit reports. Now, what we've seen in the UK is now a new expanded audit report, and I'm very conscious this differs across Europe in terms of how auditors actually report. But I think the expanded audit report for the UK has certainly been a very marked improvement. And the problem I see at the moment is that these audit reports tend to just be a reflection of what the audit committee report is, or vice versa. The audit committee picks up the points the auditors wish to raise and therefore include that in the audit committee report. I don't think these audit reports, as I said earlier, are talking enough about risk, and I don't think they're transparent enough about what the auditor really thinks about the prospects and other areas of the company. Just to give you a couple of examples, where have you seen an audit report that talks about management stretch? Where have you seen an audit report that talks about competition issues and the impact, as I said earlier, on business models? So these are just some of the points that I thought I would raise at the beginning. But the real impact of my speech today was just that my concern has been the impact of regulation on audits. And has the pendulum over audit quality really made the audits too mechanical? Certainly people I talk to, and these are young people that are just starting their life in audits, recently qualified people, are moving out of the profession because they're saying box ticking and form filling. And literally is time where they're not reviewing the effectiveness of the organisation. Now, as an investor, that worries me. If time is being spent unnecessarily on documenting everything, then what I'm really interested in as an investor is, has there been enough time spent on looking at the effectiveness of the audit and the organisation itself? And audits need to be fully holistic. Certainly in my days, we would look very carefully at things like cash pressure inside the business, because cash pressure can have an enormous impact across the piece in terms of controls over the creditors' ledger, a whole range of different areas that people should be considering. So this holistic view of the audit, rather than looking at one section and saying, has that section been properly completed, concerns me. But as I said, I wanted to come back to what's happened to VFM Audit, and I'm very pleased to see the result of our Buzzmaster there coming in with 70% of you thinking, roughly, that this should be part of the audit process. Because I do said that selling of audit services has intersected with this, and I think it's actually affected the incentives around an audit. And I would like people just to reflect on that issue. So, and I think my justification for looking back and including more stress on value for money audits really comes from this statement that Sir Mark Walpole was the UK government chief scientific advisor, and he was commenting generally about innovation, but he was saying that it is the lifeblood of the economy. And my concern is, as indeed across all areas of regulation, is that if it focuses too much on box ticking and codes and regulations, it takes away innovative thinking in how to carry out an audit. It takes away the reliance someone's prepared to take on looking at perhaps a new way of addressing audits through technology. And I give you an example here, again, just a short one. I joined the board of an asset management company which is part of Halifax Bank of Scotland when I first stood down as the chief executive of the Institute of Chartered Accountants. And that business, HBOS, ended up a failure, one of the major banking failures in the UK. But it was quite clear that there were parts of that business that hadn't been and weren't being looked at in the right sort of way. For instance, its life assurance business, which had invested a lot of money, was seeing massive outflow of funds and management were doing nothing about it. Strategies to lend into the commercial property sector were not being properly examined as part of the audit, in my view. And all of these points were being ignored, as far as I could tell, from the audit process. So my premise today, and it really ends up as my second question, was that I believe the growth in rules and codes developed by the regulators is danger of preventing innovation in audit techniques and assisting management. I'm really looking for management being assisted in the audit process with fresh eyes, looking over operational effectiveness of the business. And therefore, my final buzzcock question is, do you share my concern that the regulatory codes and rules could stifle innovation from audit firms? Well, I'm pleased to see I've got a sympathetic audience. Thank you very much indeed.
Thank you so much. Thank you so much. Yeah, maybe stay seated for a while, because we had some Buzzmaster questions coming in for you during your talk, but I've got a question for you to start with. Value for money implies that the value should go up. Could the money part also come down to satisfy your need? And the next question is, and perhaps have a separate set of fresh eyes not connected to the audit process. Would that be a satisfying scenario? And perhaps have a separate set of fresh eyes, not connected to the audit process. Would that be a satisfying scenario?
Yeah, I think experienced eyes, what the auditor brings, and I've seen this time and time again, what the auditor brings is the experience that they've had with other clients and other spheres of working. So coming into a banking area or a financial services business from having audited a retail business, for instance, can give a totally different perspective. And one might argue, for instance, we've seen in the UK major problems with IT in the banking sector. And one might argue that here is an area, well, why haven't the auditors flagged that issue of 15-year-old lack of investment in IT?
Yeah.
Whereas in the retail sector, that's moved quite dramatically if those businesses want to survive and do well.
Okay. You had this question. You said 70-30. Well, it was 67-33. Okay. Shall we have a look at that 33%? Because we can do a little down drill on them and see who they are. Are they male, female? What business are they in? Okay. So maybe let's have a look at them. So this was the outcome at your question. You can see it at your own screen. And now Monique will do a little down drill on... Okay, so female 50-50. So they were equally shared, the no voters, on business. Okay. Hey, this is quite remarkable, isn't it, Monique?
It's quite an interesting result.
It is. What does this tell you, Eric?
I think this tells me that there are some management teams, if they're in the room, who maybe don't want a second pair of eyes looking over their business.
Does that surprise you?
It does surprise me.
Okay, why does it surprise you?
Well, as an investor, it surprises me because they should welcome the view of that set of eyes. As I said, I tried to give the example of the retail auditor coming in looking at a financial services business and vice versa, on IT technology and so on. Bringing experience across businesses is really valuable.
Okay, cool. Let's have a look at the questions coming in for Eric. And, well, quite a few. Pick one, Eric. Pick one where you think, well, that might be a good one, which is giving more clarity. Somebody saying hello.
Well, there's a good one here about if you expand the audit scope, would you expect to pay extra for the audit?
Okay.
I don't think I'm really expanding the audit scope.
It's the one from Maren Kelsal. Yeah, can you make that the big one? Second row, Monique, Ford Balloon. No, not that one. That's the one from Karen, from Meran. In de tweede kolom. That's the one.
Yeah, that's it. Yeah.
If you expand audit scope, would you expect to pay extra for the audit?
No, I'm not expecting to expand the audit scope. I'm expecting the auditors to do their job in looking through and understand the business. And I'm looking for observations that they might make as a part of what they should be doing.
Okay. Okay. Meran, is that a good answer for you? Where you seated? Yeah? Are you happy with the answer?
I think it's debatable.
It's debatable. Well, that's perfect, because we have a debate within 20 minutes. So we will meet again. We will meet again. Okay, pick one other question. We will keep Meran in mind.
So, should auditors deliver opinions and communications beyond periodic reports? That's a very interesting question.
And where can I see it?
Right.
Should auditors deliver opinions and communications beyond periodic reports? From Piotr. Okay.
I mean, my experience there is, this comes back to my first slide about the relationship between the various parties here. The auditors should be communicating all the time with management and with the audit committee. The role then is between the audit committee and the management as to whether there are issues that need to go back to investors. But I believe that that communication system does work between auditors and management and the audit committee. By and large, I've not seen any difficulties on the communication front.
Okay. Thank you so much. We will leave it now. Let's go to our second speaker, but not after we gave you a very big applause. Thank you so much, Eric Anstey. Okay, let's go to our next speaker. It will be Mr. Carl Dolan, who is the Director of Transparency International. an NGO committed to fighting corruption. And Mr. Dolan will speak about the importance for stakeholders of mandatory disclosures and how it enhances transparency and good governance practices. Give him a big hand. Carl Dolan.
Thank you, and I am going to speak about that, but I'm going to give a bit of a build-up first. Yes, my name is Carl Dolan. I'm the director of the Transparency International EU office. My boss wouldn't thank me unless I pointed that out. I'm not director of Transparency International, the global organization, which has now got 100 organizations, 100 national organizations all around the world, with its activities coordinated by a secretariat in Berlin, international secretariat in Berlin. And I'm very, very pleased to be invited to this panel, since it emphasizes the fact that civil society, and by implication the public more generally, are seen as a key stakeholder for the audit profession. I won't pretend to speak on behalf of those very large and heterogeneous groups, but from the perspective of my organization, an organization that has spent the last 21 years now fighting corruption and trying to improve governance standards in both the public and private sectors, the feeling is very definitely mutual. Now, you may see yourself in the accounting business, but we in Transparency International see you in the accountability business. Now, this may be evidence that we too have fallen victim to the so-called expectation gap, and more on that later. But for now, I just want to note a social fact. Now, this is partly because audit and the auditors have been such important allies in the fight against fraud and corruption, providing the tools and expertise to unearth dubious practices and to design the systems that can help prevent corruption in the future. Along with lawyers and political scientists, auditors are the profession most heavily represented in our organization. Some might say overrepresented, not me. And we have also enjoyed the support of accounting firms in our work to raise awareness about the corrosive effects of corruption and what can be done to prevent it. And indeed, many important whistleblowers around the world have been accountants and auditors, and I would just like to pay tribute to two of those here. I would like to speak a little bit about Eugene McKierlin, someone that I have had the great pleasure and privilege of working with, who was a former head of internal audit in one of Ireland's largest banks, who discovered a scheme to systematically cheat that bank's clients on their foreign exchange dealings. For doing his job in reporting this, he was dismissed, ignored, vilified, and despite receiving a public apology from the head of Ireland's central bank over 10 years later, he has never since worked in the sector. I would also like to mention Sergei Magnitsky, an accountant and an auditor, and also a former winner of Transparency International's Integrity Awards, for his bravery in exposing the role of Russian authorities in perpetrating systematic tax and VAT fraud. He was prosecuted, detained in prison without trial, beaten, denied essential medicines, and died there in 2009. His case led to the US Congress passing the Magnitsky Bill in 2012, which denies visas and other services to those Russian officials who were implicated in his death. But the fact that the role of the auditor can sometimes even be heroic, I think as these cases demonstrate, probably accentuates rather than diminishes the famous expectation gap. Now, we are very clear in Transparency International about what statutory audit means. It provides assurance that the companies are complying with a narrow set of accounting conventions and does not signify financial health or a corruption-free zone or anything else that the public, NGOs, or even the courts might think is socially desirable. But that does not mean that we do not seriously need to think through what the social responsibilities of the auditors are within these constraints. Now, I know this is an issue that's been around for a long time, and when doing my research for this conference, I came across a speech that was given by a Transparency International board member from 16 years ago, a lifetime ago. And you can think of it maybe as the ghost of stakeholders past. And he made the following observations, which I think are still relevant. He said, "Globalization means that today money has been rendered effectively stateless, it is fungible, and it has lost its identity. Gigantic volumes of money can move across national borders in split seconds at the press of a button. The all-vital audit trail has almost become a ghost. Finance is the most quickly globalizing sector in the world. This was 16 years ago. And the regulatory implications of this are profound. Generally speaking, increased transaction volume and complexity makes corruption easier and more difficult to detect. And the paper concludes that the role of the auditor, therefore, in helping increase transparency and combat corruption is more in focus today than ever before, and in an environment that is more challenging than it has ever been. So that's 16 years ago, and it's interesting to see how the debate has developed. Well, one might say, plus ça change, or perhaps more accurately, this is more true now than ever. The problem in particular of illicit financial flows, as has been well documented by the US NGO Global Financial Integrity, which has reported that approximately 70 billion flowed illegally out of emerging EU economies in 2011 alone. In the developing world, we're talking about trillions. So the scale of that particular challenge has not diminished in 16 years, but paradoxically, I think we can make the case that the expectation gap has. And this is unfortunately not because the audit world has been demonstrably embracing its social role, but rather the reverse. In the eyes of the public, more than ever before, the auditing profession is seen to enjoy a narrow, technical, commercial, some might even say a self-serving role. In 2012, an ACCA survey showed indeed that a major gap between the proportion of accountants who believe the public trusts them, 73%, and the actual level of public trust in accountants, just 55%. Now, the financial crisis and its aftermath is one of the main reasons for opening up this trust gap. And the issues there, the response of auditors and the regulators, all of these are well known to you, I'm sure, and I won't rehash them here. But perhaps a more recent case is even more exemplary in explaining the wariness of the public with regard to auditing standards. Of course, you are all well aware of the ongoing investigation by US and Swiss authorities into alleged corruption in FIFA. The response of most people familiar with this case was, at last, finally, someone is doing something about this. Finally, somebody is taking seriously the very large body of evidence available that the finances of this organization are riddled with fraud and corruption. Now, this contrasts with the role of KPMG's Swiss subsidiary, FIFA's first and only auditor over the past 16 years. Apart from one letter questioning a payment made in 1999, FIFA's books have been signed off without qualification or question, most recently just 2 days after 14 FIFA officials and 14 sports marketing executives were indicted on 47 counts of racketeering and corruption. And we should bear in mind that, at least according to the investigators, many of these alleged bribes went through the FIFA books. Now, of course, the statutory audit will never provide a guarantee that companies are free from fraud and corrupt activities. At the very least, however, given the endless red flags that have been raised over the years about FIFA's activities, this case raises questions about the effectiveness of the audit procedures, the willingness to follow up on anomalies, and the degree of challenge provided by the firm. Now, regulators such as the European Commission have stepped in to address some of these issues with the new rules that will come into effect next year. Now, the jury is still out as to whether these reforms will have the desired effect. However, our view is that whatever the value of reforms, such as giving auditors more flexibility with the kind of information provided in the audit opinion, the most important thing is a change of mentality and a fundamental change in culture. And here are just some of the things that, in our view, would help with that change of culture. Firstly, the societal role of the auditor needs re-emphasizing in the profession so that the obligation to measure performance against society's expectations is constantly in focus. A specific reference to the auditor's responsibility towards society should be taken up in accountants' training materials. This should be done in both training and refresher courses and could be repeated in the auditor's formal opinion. This kind of ethical outlook should also inform the objective distance that auditors need to keep from their clients and is key to exercising the professional skepticism in a climate of trust. Secondly, auditors could conduct, or at least take into account, ethical audits of businesses, especially before taking on new clients. These audits would look at how ethical problems are currently being dealt with and test behavior both against external standards and against the firm's own declared values. And thirdly, auditors could become involved in stakeholder dialogues, which are becoming more frequent in many companies. This would also be in line with thinking behind integrated reporting, which aims to bring together financial and non-financial reporting. On this last issue, undertaking a broader, more formalized dialogue with its stakeholders, let me mention one last issue, the one that was mentioned in the introduction. Over the last 10 years, and not least in Brussels, there has been a chorus of voices that have pointed to the inadequacy of global consolidated accounts that multinational companies publish in providing an insight for investors into some of their key in-country risks, and also in providing a measure of accountability to the citizens in the countries where those companies operate. These voices have been calling for so-called country-by-country reporting, a geographical breakdown of key balance sheet data. The drivers for this are many: greater acknowledgement of by companies of their accountability at a local level, ensuring greater accountability of governments around the world for the revenues they receive from those companies, particularly in the oil and gas sector, and a realization that only this kind of detailed public reporting can reassure citizens that companies are contributing their fair share to society, especially with regard to tax payments. Now, it is only a matter of time before this becomes standard practice for all large multinational companies, and indeed that has been recognized in a survey of executives by PwC, in which 60% of those executives saw this as coming. Indeed, the European Union has made it mandatory for the oil, gas, mining, forestry, and banking sectors. It will be the subject of a consultation and impact assessment conducted by the European Commission later this year, and a draft law has been endorsed by the Legal Affairs Committee of the European Parliament. So the question really is, how will the auditing profession respond to this development? Will it team up with some of the more hidebound elements in the private sector to cast doubt and delay these measures, pointing to some of the well-known but surely not insurmountable difficulties? Or will it take its place on the sidelines, looking forward to the fees that might be generated if the regulators decide that such information requires additional audit? Or will it use its skills and the expertise at its disposal to join with a broad coalition of forces in academia, in civil society, in journalism, with investors, companies, and try and make this innovation work, and indeed work as a global comparable standard? The latter option, I would suggest, is the only option available if the profession would like to help to reduce the trust gap. And as a representative of Transparency International, I would like to invite you today to join with us in this coalition and to make accounting and accountability allies once more. Now, I think this is the opportunity for me to ask you some questions about what you've heard, and so Monique will have a couple of questions, first couple of questions coming up. And relating to the issue of challenging clients, do you think that the audit profession could do more on that score? Okay, I think that's very, very heartening indeed for me to see, although I'd be interested to see the answers of those who said no. And the second question? Do you think that the audit profession has a role in developing a global country-by-country reporting standard? Perhaps there should be a don't know category as well. Okay, there's less of an overwhelming consensus there, but that's also very heartening, and it looks like we can have a few conversations after this panel. Okay, thank you very much.
Thank you so much, Carl. How can the auditors present here today contribute to transparency? What would you like them to adopt in their way of working?
I think it's not so much a case of the transparency, although I think that one of the suggestions from the earlier panelist, which was that, or one of the questions to the earlier panelist, which was about making statements outside of the normal cycle of the audit opinion, etc. I think that might help to increasing transparency. But I think the issue is more about culture, mentality and challenge, I think, and providing more challenge within the constraints of the audit opinion as it is. Yeah.
Okay. Mm-hmm. Let's have a look at some questions which came in while you were speaking. Well, Eric Anstey, he was sitting in the panel and typing in a question as well. We got two anonymous questions. Could you read them? You could see them on your screen. Which one would you like to address? Maybe we could leave that one from Eric, because maybe we can pick that one in the debate later on.
Well, I think looking at the question in the top right-hand corner, isn't it shameful that auditors...
Is that the one from Piotr? Yeah.
That auditors must become whistleblowers instead of blowing the whistle as part of the regular audit assignment? I think that's absolutely right. And I think that a supplementary point I would make here is that those people who do have to blow the whistle, if they can't do it in the course of their normal duties, really deserve our support and protection. And unfortunately, in many European countries, even in European countries, whistleblowers do not get the protection and support that they need. They do not get the legal protections that they need, and this is something that needs to be addressed as a matter of urgency.
Okay. We see you in the panel.
Okay.
Thank you so much. Give him a big applause. Our third speaker is Janine van Dichelen. She's the chair of IFIAR, the International Forum of Independent Audit Regulators. And she will be providing the perspective of the audit regulator. Janine van Dichelen will highlight the importance of auditors for functioning capital markets and the need for improvement in audit quality, and facing that competition should be on quality. Janine van Dichelen. Give her a big hand.
Good afternoon, everybody. It's a pleasure to be here and to give an introduction to you. In my introduction, I like to highlight three things or three messages, and I will do that from an audit regulator's perspective. And the first message is actually that the primary role of the auditor is the investor protection and the public interest role. The second one is that the biggest challenge for firms to strengthen trust in their role is improvement of audit quality globally. And the third one is that improvement of audit quality requires cultural and behavioral changes. And at the end of my introduction, I would like to give you a question through the Busmaster tool. And that question is actually as a sort of, that we're going to look, I want to know actually your views on whether we can say that we're currently at a sort of turning point in time, so that going forward, let's say in the short term of 5 years horizon, audit quality will significantly improve. But before we there, I'd like to start first with explaining a little bit more about what audit regulators, who are acting actually, saying that they are there to protect investors and also in the public interest, that is their role, to look at what they expect from auditors. Well, auditors, they play a very important role for the functioning of the capital markets, and their opinion, auditors' opinion on whether the financial statements present a true and fair view gives investors and other stakeholders trust in the reliability of the financial statements. And as a consequence of the financial crisis, big incidents that have taken place, happened, and accounting scandals, this trust in the auditor has eroded. As such, there is a need for more transparency, both on the company and the audit. To strengthen trust in the auditor, it is important that auditors are independent, exercise professional skepticism, so certainly not ticking the box, but yes, indeed, challenging management, challenging assumptions made by management. That is important. And that the auditors are transparent on the process and the outcome of their audit. Therefore, auditors must keep in mind that their clients are the investors and the public at large, and not the companies that pay their bills. So, for strengthening trust, there should be no doubt on the quality of the audits. So, what is actually the current state of audit quality? Due to some major accounting scandals, and I know that you're all aware of that independent audit oversight was set up in many jurisdictions in the beginning of the 2000s. These independent audit regulators started doing audit inspections at the largest audit firms in their jurisdictions. In 2006, IFIAR, the International Forum of Independent Audit Regulators, was established for cooperation amongst audit regulators and for exchanging information on audit oversight matters and on the audit market. IFIAR has now published 3 years on a row the outcomes of its members' inspections. And the second bullet on this slide shows actually the outcome of our last inspection findings survey report that was published in March this year. And I'm sorry to say, but despite all the measures taken by the firms, but also by audit regulators since their existence, so far there are still high levels of deficiencies that were reported by the individual members of IFIAR. Personally, I'm very concerned with these high levels of deficiencies. For 47% of the inspected files, material deficiencies were reported. And material deficiencies means that there was insufficient evidence in the files to support the auditor's opinion that was issued. And what also concerns me is that the main areas of findings are quite consistent with those of our earlier surveys that we did as IFIAR, and that these findings relate to key areas in the audit. The big question is, when will all the measures taken by the audit firms start showing effect? As the current levels of audit inspection findings are not acceptable going forward. Here you see a slide where there are some detailed outcomes of the last survey, and the top 3, the fair value measurement, internal control testing, and revenue recognitions are the top 3 findings that resulted from the survey. And you see that, for instance, for internal control testing, 24% of the files that were inspected, and we're talking about public interest entity audit files, audits, 24% of these files inspected showed a material deficiency. So that is quite a high number. But there are also some early signs of improvement, as some IFIAR members have reported that they do see overall improvement in audit quality in their jurisdictions. And I hope that this will turn into a positive and sustainable trend forward. So, what is currently happening to improve audit quality? Let me first start focusing on the work that audit regulators are doing. And not only individual audit regulators, but also through their cooperation in IFIAR and also on a European level, for instance, or other regional levels through the European Audit Inspection Group. The continued work by audit regulators is focused on the audit firms that they deepen their root cause analysis. Root cause analysis on the findings that result from the audit inspections that the regulators are doing. This is very important because we often hear or get from the firms that they're doing root cause analysis. And the most common root causes are things like, that we hear are things like pressure on fees, pressure on of time pressure, or not enough review, coaching, etc. But the big question here is, are these really underlying root causes? Are these causal factors, or are these merely symptoms of underlying factors? It's very important that the real underlying root causes are known to the firms so that they can take the right measures to address these root causes effectively. And For us, it's therefore very important that the measures that they address also culture and behavior in the firms, because that is really what drives the real audit work and the quality in the end. So I personally think that improvement of audit quality requires cultural and behavioral changes, and that the strengthening of governance of audit firms can also contribute to this. Focusing on regulatory developments, first I like to mention the EU audit reforms, but there are also similar kind of reforms going on a global basis in other parts of the world. But there's the strengthening of the independence of the auditor, but also of the audit regulator. There is strengthening of that. These are good developments, I think. But there's also development on increased transparency, not only on the audit by, for instance, the expanded auditor report, but also on the quality of the audit. And that is important because further transparency on inspection findings by regulators should be known to the public, so that the quality becomes a very important driver in the market dynamics in the audit market. Also, the role of the audit committee is important, and that role is also being strengthened in the recent regulatory changes in the reforms. And the interaction between the audit committee and the auditor, also when it comes to the selection of a new auditor, but also the evaluation of the auditor, is an important new development. And in my view, these developments can contribute to more competition based on quality rather than on price in the audit market, which can have a positive impact on audit quality globally going forward. And this brings me to the question that I like to pose to you. Do you think that the developments that I briefly touched upon will be sufficient for more competition on quality in the audit market, and thus for auditors better meeting investor needs and their public interest role? This is a very interesting outcome. So I think a lot more needs to be done. So I'm very curious to get your views on what else needs to be done. So it's not the new auditor report, more informative auditor report, not the other things. Yes?
That could be nice. So what's your question for the audience, Janine?
My question is if the overall view of the public here is that the new developments, the recent changes, also the reforms, that will not contribute to more competition on quality in the audit market.
Okay, so what could we do more?
What else needs to be done?
What else needs to be done?
Because I think that is a very important thing for improvement of audit quality, because it drives quality in auditor behavior. If in the audit market there is a competition model more on quality than on price or other aspects.
Okay, we have a finger over there. Yeah.
Well, I'm just going to try. Karel van Hulle, Public Interest Oversight Board. I think that a lot of reforms recently have focused on form and not so much on substance. And I think that the big issue that we have today, and all of you have been talking about it, is the public interest role of the auditor. And whether the way we define the role of the auditor today is responsive to what we really want the auditor to do. And I think it is not, and that's why the answer is no.
Okay. Can you react on this, Mr. Janine?
Yes, I understand that viewpoint. The big question is what we nowadays say, this is the audit, this is what an auditor needs to do, this is what we all agree internationally, whether that is sufficient to meet eventually investor needs and this public interest role. And I also see that there is that is really an important debate. But still, I also believe that currently already in, let's call it a mandate that the auditors have nowadays, what constitutes an audit, and that there is already a lot of room for improvement of audit quality. Why is it so difficult to do a good audit? It's a matter of consistency in execution. We also come across many good audits as regulators. So what is really the issue here? Not that they cannot do an audit or all audits that meet actually the standards, or how to call it. So and also then what we expect from an audit.
Okay.
Yeah.
Later on, we can address this question in the debate. You had another question for the audience, or not?
No,
it was
this
only
was the
this question.
Yeah.
Thank
start
you.
with. Yeah.
Thank you very much, and we'll see you later during the debate. Give her a big hand. Thank you very much, Janine van Dichelen. Okay, our fourth and last speaker in this group is Luc van Steenkiste. He's chairman of European Issuers, and European Issuers is a not-for-profit membership association based in Brussels, which represents the interests of quoted companies across Europe. Luc van Steenkiste, where are you? There he is. Give him a big hand.
So, ladies and gentlemen, I'm not sure after all what I heard that I will be the most popular speaker today, but I will give it a try. The good news is I have no questions for you. Let's go back 2 minutes in history. In the late 90s, we had a number of what we call scandals around Enron, causing people to think about what companies should be and how they should behave. And that was, in my opinion, the origin of the audit committee. And like always, companies confronted with that new idea were not really in favor of it. They thought it would cost too much, and they thought it would certainly create kind of a double layer concept between the board and the audit committees, and therefore was something they didn't like. But I can assure you that from the organizations of the enterprises or from the organizations of the issuers, slowly but surely we have succeeded in convincing them or accepting the audit committee principle. And when then corporate governance came later, it was clear that that was something that was part of that corporate governance, and it was embedded in the law, so to say. At the same moment, in the early 2000s, came the notion of we don't understand the accounts anymore. They are different between the countries in Europe, they are different between Europe and the United States, and the whole issue about IAS, IASB, and IFRS came up. In his wisdom, the European community legislators have decided that the board for creation of IFRS would be based in London and constituted by the most intelligent, independent people available, which is a good thing. The result of that was that we had in reality an academic group of people sitting together, highly intellectual, highly capable, but leading to the biggest confusion in terms of notions and mistakes they have been doing. So that at the end of the day, we in the company levels, we asked ourselves if that was really all worth what was going on. And clearly they have missed absolutely the ball on the term of creating a uniform world standard for accounting. It's a complex thing, it's difficult, it creates confusions in the companies, and it's very cumbersome. Then came the crisis of 2009, something we did not need, but that created a kind of a new wave of regulations and laws from all kinds, because not only the banks were guilty for the crisis by definition, and I have been chair of one of the banks that was in big difficulty, so I know something about it, how to conclude some of the accounts in that kind of atmosphere. And, but also the companies that were appealing for money and that were on the stock exchange were certainly guilty ones because money was involved, so they were having an absolute necessity for new rules and legislations. And they came massively. In all those years, I must say, in all the boards I have been serving on, and I'm still serving on, as chair or in the audit committee or in the board, we also had an excellent relation with our auditors. We had highly competent people. They were extremely independent. They had the courage to challenge us. They were not always easy to convince, but they had also the capability of making a balance between what in complex situations to find an answer to how do we have to translate this into the accounts or to the communications to the outside world. So no blame on that. But one thing, we never heard a strong voice of the auditors or the accountants or their associations on the European level to warn about the complexity of all of this and the incapacity for companies to cope with all of that. Let me give you some of my conclusions on what has happened. Since 2009, 1,000 companies have delisted from the stock exchange. We are from 12,000 to 11,000 in Europe. When we asked them why they have done that, in Germany, for example, 65% said cost-benefit ratio, not acceptable. Too burdensome, too difficult, we don't get what we need or what we expected, we go out. When we look at smaller companies, they have it even much more difficult than bigger companies, and they have it extremely difficult to go to the stock exchange today. If they want to go to the stock exchange, they have to be double of the size, because over the last 10 years, the burden and cost for them has doubled. Has multiplied in such a way that they have to have double of the size to be capable to do it. So 1,000 left, less than 100 came in the same period. And today we talk all about growth and economy, which is the new way to do so, because the old way in 2009 was to create financial stability, which is an absolute good focus, and absolute try to find risk, as low possible risk for investors as could be imagined, and transparency. So today we are in an economical growth and job creation environment. We should be honest. When you look at the stock exchange, for example, and it's not about the IFRS, but it's part of it. When you look at the stock exchange prospectuses, then more than half of the prospectus is about risk and avoiding risk and getting out of the liability of not having described the risk. There was even a Spanish company that mentioned an earthquake as being a risk. You can also have heaven falling on your head and mention it in the prospectus, which is a nice thing to do. Then you are not liable anymore. That's what it's all, we should be honest. That's where we came with all those regulations and all those things. We have been in a situation in which things became ridiculous. If the prospectus does not tell you more about the business than about the risk, then there is something wrong. So we are absolute at European issues pleading for some sit down, because we have a new directive from 2011 that is popping up, approved in 2013, implemented in 2016, all created it, and in that period of deviations and difficulties around controlling the companies, and now we are there with something that nobody has assessed in its impact. There is no evidence that these new rules will create a better environment. There's a lot of evidence that we will do a lot of box ticking and that we will do a lot of filling in papers so that we can cope with what the legislator or the regulator is telling us. And I make an appeal to all the legislators and regulators of this European major economy that should be the best of the world. Have the courage to put your decisions of the past in question. Ask you what you meant to achieve. Measure the impact. And if it is not successful, then abolish the law. And second, before you bring in a new law or a new regulation, then have the courage to prepare what you want to have as an impact and check it 2 years later. And check it with us. Come to the companies and the auditors and to all the stakeholders involved to find out where we and what we should do to improve the situation, because there is no doubt in our minds that you have to focus on creating as less risk as possible for the investors and as less untransparency as possible. But don't forget it, no risk, no business. That's for me an absolute give. Thank you.
Which results would you like to see from enhanced competition between audit firms?
Maybe now I will please everybody. I think that, of course, as a company, as a company on the stock exchange or not on the stock exchange, you also always want to have as much competition as possible. I think that there is enough competition for the smaller companies. There is enough offer in the market for smaller companies to get somebody that fits with their needs and their cost benefit pattern. I think for bigger companies it's much more difficult, but the law today that is guiding all of the audit companies into a kind of a mandatory change, I personally think this will not help. This is not the issue. If competition has to be created between bigger companies, then maybe the competition authorities should take that in hand, but not the legislators and regulators on the audit firms. Because we need people that understand our business. My company, Recticel, was in 28 countries, in 120 factories, 10,000 people. The complexity is high. Before an auditor understood anything, you need a couple of years. A bank is even more complex. In Fortis, there were BNP Paribas, there were joint auditors to handle all the issues. Once they have understood what the business is about, and once we have understood what they consider as being the main issues for them, it takes a couple of years. And you have to continue that game. You can change the auditor on a gradual method, but to have him in a mandatory changeover every 10 years, I think it's useless. So I would like to have somebody telling me how we can make you more competitive to us, but not on the way the law is foreseeing it for the moment.
Thank you. We had some questions coming in for you. Let's pick out one. Monique will change to the screen. Well, Sydney, 22nd, 26. Which one would you like to pick? Maybe the IFRS question from Piotr? But I leave it up to you. Which one would you like to address?
Why do your members not raise their voice?
Yeah, Sydney. Maybe make Sydney's bigger. Why do your members not raise their voice in their... Oh, Sydney's still working on his... in their countries. Okay. Why do your members not raise their voice in their countries?
I will go here so you understand me. The whole group of European issues is an assembly of groups, local associations being brought together over the last 12 to 13 years. Susanna is in the room, she can control me. Okay? That's something like that? Okay. The fact is that they all have also to do something that is difficult for them. They have to bring their laws into European environment. So they all have their own vision on how Europe should develop. What we try to do is bring all those visions together so you hear more, and you will hear more, I hope so, about European issues in the future than you would heard in the past and that you would heard from local organizations. Because let's face it, I was the president of the Federation of Enterprises of Belgium. We had 35,000 companies being a member of the federation. There were 120 companies on the stock exchange. That's all. So we were not paying attention to them enough to keep them likable to us, but not enough to defend their rights. And the small group of EALIC that was existing in Belgium on that issue was not really strong enough to be in the public. That's very simple. So European Issues tries now to convince all of those people, all the associations in the countries, to have one single voice to Europe. And that is what we are trying to build up. But you're right, we have not been loud enough in the past.
Okay, thank you for answering, Luc. Okay, now we're going to a very quick debate, only 15 minutes. And what you see is two people in the audience with microphones. Maybe you can wave to the audience. So there they are. I will ask the audience, I will ask the panel some questions. And whenever you think I like to react to that, raise your hand and we get to you. Short answers, quick questions. Let's start with the first one, actually, which is for you, Luc. Janine, you argue that competition between firms should be on audit quality. And now my question for you, Luc, is this the kind of competition that European Issuers intends to support, or are you looking for other kinds of competition between firms?
I don't think audit quality, you can have specializations. When I need somebody from for a bank as an auditor, I will look at those audit firms that have enough capabilities in this. And I know some of them are better than other ones because probably they have more experience in that sector. When I look for industry, I will look again for another group of people. So I don't think there is something wrong on the competence of the auditors in that respect, technically. They have the skills to do so. The only problem is that there are so little of them, and that they are more and more absorbing the smaller firms and making bigger groups to give an answer to that, that problem.
Janine, can you react on this one?
Yes. Well, I think that also the matter of lack of choice could have an impact on audit quality. And I think that currently, if you hear and read the papers, and sometimes there are these reviews being done on audit fees, and you see that these audit fees go down and down, or have gone down over the years. And at the same time, we know that there are so many audit quality issues out there. Then for us, that it is a sort of clear thing that there is a lot of competition. And if you also talk with the audit sector itself, they always say, yeah, there are even audit committees that think that they need to get discounts on the audit fee. So there is a direct link between, the competition and, in the end, I think, the quality that is being delivered. It shouldn't be like that, but it's a fact of life, I think. So our thinking is, when there would be much more transparency on the quality by the various audit firms in the market, and audit committees with their role that is being reinforced also by the latest regulatory reforms, that there could be more focus on the quality aspect when it comes to tendering, firm rotation, etc.
Okay. Anyone in the audience who likes to react on this last statement of Janine? Yeah? Hey, we saw you before.
Thank you. I will. I won't remain anonymous, but I'm Jimmy DeBoo. I'm an audit partner at KPMG, and I'd just like to give you a little bit of our UK experience since the, let me call them the rotation rules, have come into place. And I think it's fair to say that having been criticised by a number of audit committee chairs for being an industry that really hasn't moved on in 50 years, the amount of innovation you're actually seeing the big firms generate in how audits are being carried out over the last 18 months has been enormous. And I think that's a direct response to the fact that the amount of audit tendering that's been happening in the UK. I was very negative initially about the new regulations, but I think it's really helped in that regard. I think the other interesting thing we have seen in the UK is that audit committees somehow have managed to completely divorce the fee aspect from the quality aspect in how they're making their decisions. And that surprised us very positively, I think.
Janine?
Yes, thanks for sharing the experiences you have in the UK. Actually, that supports, I think, the thing that I was saying during my introduction, that these reforms could have a positive impact going forward. It's also with the expanded auditor report. It's now, for firms maybe easier with that to distinguish themselves in the market. And also what we discussed already on the role of audit committees, that is strengthened, and more transparency by audit regulators on the outcome of inspections, not only just to the public, but in particular also to audit committees. That is also a beginning trend, so to say. That is also very powerful in that sense, I think. And in general, education to audit committees is also very important, that they understand their role, that they are aware of the impact they have on audit quality or can have on audit quality.
Okay. I would like to go to the next topic. Carl, you are making the case for more transparency. But this has to be paid for. So, Eric, would you consider the transparency that Carl's advocating as value for money?
There's a truth in the argument that transparency in business actually can add a lot to value. The more an investor understands the true business and the capabilities of the business, then I think, yes, it can provide a lot more value than people think. I think coming back to linking the two, actually, to the earlier question, I would say that one of the issues about audit quality is that the audit doesn't look forward enough and look ahead to what is coming inside the business.
Yeah, please talk to the microphone, otherwise it will be...
Yeah, sorry. So I would be trying to say that one immediate way of improving audit quality is to try and get more emphasis on the forward-looking situation on audits. And I was interested in the KPMG comment. I mean, and we'll hear that in the next set of speaking today, about the use of technology, because I think there is a lot to be said for embracing new technology and a new approach to how audits are being done.
Okay. Carl, can you react on that one?
Well, just on the costs, I mean, I suppose there is an open question about the cumulative costs of all these things, but on the very specific issue which I raised in my presentation, which is the cost of companies publishing disaggregated financial accounts country by country, I mean, I think the costs are minimal. There was a study done by the UK, in the UK a couple of years ago, which showed that the costs of producing this information, which companies already have, and so in a sense we're talking about the cost of actually just getting this information and putting it online, would be about £200,000 per year. Now, don't want to, that is significant, but for a large multinational company, I don't think this is the difference between, say, listing and delisting.
Yeah. Okay. Thank you. Monique, can you go back to the first question Eric asked the audience, value for money on auditing. And then we had Maran sitting in the audience. You said, well, were you one of the no voters? Where's Maran? You were Maran. Oh, there, sorry. Yeah, you look a bit like each other. Okay, do you agree that value for money auditing should be part of the audit process? Were you a yes or a no voter, Maran?
Well, I actually said no, but it could be partly a definitional problem, just quite what is meant by value for money auditing. And I guess I interpret it as expanding the scope of the audit beyond what auditors think they're doing today, and therefore raise the question about should there be extra payment. So I think the debate should be about what is actually meant by value for money auditing, and how do auditors see that? I'm not an auditor, I'm a standard setter.
Well, Eric, could you address this question?
Well, I mean, in direct response to that, I think maybe it comes back to one of the two comments I've made already, in that I believe that the way that audits can be conducted is that people aren't focusing on some of the major issues, and if you perhaps look at what has happened in the banking crisis that was referred to, that were the auditors really looking ahead enough on the whole issue about liquidity? Is a good example of where I would say value for money auditing should have been picking that up and raising those issues with the management. So I think it's not a question of adding to scope. I think it's actually making the audit more effective and putting the scope in the right order. And that's why I came back again to the technology point. I think here we are in a big digital age, major changes taking place. There are lots of capabilities, just looking at what can be done with tablets now and so on, that needs to be quickly embraced, because the speed of change is enormous. And so I was very delighted to hear the changes that have been made in the UK in the last 18 months on that front.
Okay, thank you. Janine, are you worried about overregulation?
Well, the word already starts with over, so everything that is too much, I'm not in favor of, personally. So, but of course, regulation should be balanced. But I think I have to make one comment here, because, and I think it was Eric who touched upon that in his introduction. It is it's not that the audit regulators all come up with new codes and new rules in general, or to start with. Of course, there has been things and reforms in Europe and have that came into effect. But in essence, when it comes to doing a good audit, it's just still, it's the accounting of the auditing standards that apply or should apply, and that the basis is, the profession itself who had together through the international standard setters who have set the bar there for what should an audit be like. And in that sense, I think, and for me, and there's a lot of debate on audit quality, how to define it and what can contribute to it. But I would say that if there would be an improvement of audit quality, when we define audit quality very simple in a way that the standards are being met in the audits that are being delivered, I would be already very happy. And let's then start talking about the broader picture in terms of expanding scope, etc., etc. Because I think there's already quite some work to be, there's still a lot of work to be done to meet the current standards for auditing.
Okay. Well, my next question is for Eric. Eric, do you feel that more regulation and oversight will improve audit quality? Or do you think it will make auditors focus less on the business?
I think my concern here on the whole issue is, and I think Janine talked about that, about the number of deficiencies that have been found. I'd like to know a lot more detail and colour around what those deficiencies are. If those deficiencies are, well, we haven't seen evidence of oversight, of review of this audit paper, or that has not been properly signed off, then that to me is a minor deficiency. It's actually, if there is a major deficiency found, what I would like to see is the regulator then thinking about whether or not the audit should be reperformed. Has that decision, has that work by the firm really been compromised? And it sort of comes back to the sort of public interest point that if a regulator is going in to oversee an audit, should there not be, if there is a major deficiency, should there not be some inquiry about that particular audit, if it is serious enough?
Okay.
Shall I react quickly?
Of course.
Yes.
Yeah, react.
To start with your last comment, there is audit regulators, they have different mandates, but many do have also investigation and enforcement mandates. Yeah. So they typically, if there is a really big issue in an audit, the audit that they are inspecting, that will then be followed up by an investigation and enforcement if deemed necessary. So that is, and on your first, now I forgot what you, sorry. How material the deficiencies are. The survey results that I showed, these are typically not the formalistic kind of things, but more the substance things. So the more material findings that actually were based on those findings, audit regulators say that because of that particular finding, there is not sufficient and appropriate audit evidence gathered by the auditor to conclude on the audit, in their opinion. So there is uncertainty whether there is, the financial statements do not contain any material error, but more work needs to be done by the auditor to really see whether, everything is fine, so to say. And that is also what audit regulators require the firms to do in those situations. So it's not the more, let's say, formalistic things, but there are really things that are material enough to raise the red flag.
Okay.
I mean, I was concerned about the percentages that you were showing there, because it seemed to suggest 47% of audits that you'd inspected were deficient. And if those statistics are correct, then there is something seriously wrong with the audits, and therefore the audits need to be reperformed, or there is something wrong with the assessment process.
Well, you cannot say to extrapolate because the audit regulators they have a risk-based approach and they select a number of files, but the files that they selected for inspection, out of those, indeed, on average, for this last survey, 47% of the files inspected showed deficiencies. Yeah.
Okay. Carl, you had this question to the audience. Do you remember the outcome? Wasn't it about 89-11?
Well, there were two questions to the audience, but I think you're referring to the
first one.
Yeah.
Do you think auditors should do more to challenge their clients? We had 11% saying no. What do you want to ask those people?
Why shouldn't auditors show more challenge to their clients?
Okay.
What's your experience of that? That might be a more interesting question.
Who likes to address this question? Last question of this block. Yeah, a brave man there with the blue shirt and the red tie. Sorry to... So, who are you and where do you come from?
My name's Henry Irving and I'm from the ICAEW. Now, whilst I'm not probably one of those who said no here, I do wonder a bit about, from a sort of governance and sort of business growth perspective, you know, how relevant is that? Because at the end of the day, what you have here is you have companies that are trying to compete and do the best that they can. And the auditor's role is perhaps more limited as far as that is concerned. It's about transparency and reporting and all those kind of things. And it's not really about the business model or the value for money, or should companies be successful or not. So I guess from my perspective and reflecting what a lot of the ICAEW membership, where a lot of the ICAEW membership work, it's really about the team within the company doing a good job here, and it's about these sort of auditors being able to actually assess that as a whole.
Okay, could you react on that?
Yeah, I mean, I know that that auditors here are on a bit of a sticky wicket, to use a cricketing expression, because the auditing job has to be done in a climate of trust, of course. They have to earn the trust of their clients, so their clients are going to be forthcoming with the information. But I think it's within these constraints, I think more could be done. And you said, well, you know, the larger context is trying to encourage economic growth. Well, what we find with a lot of corruption scandals is that there is a heavy price to pay when these scandals finally get exposed, and when they're brought to the attention to the management and the public. I mean, not only the management time that is spent in dealing with this, the massive cost of internal investigations that have to be performed, but then when it comes to the regulators, the increasingly large fines that are being brought by not only the US Department of Justice, but also authorities around the world. So I think, you know, if it was only just about the business case or about economic growth, you know, auditors would be doing their clients a favor by pointing out some of these things at an early stage, rather than when they become big public scandals.
Okay, thank you so much for addressing. I'm sorry, but we have to finish this conversation. Give them a big hand, our 4 panelists. Thank you so much.